A lot of you have been asking me how to manage a small account, and in today's video, I got you covered. All you need is $1,150 managing a small account selling cash secured puts on SoFi. Today is a red day on SoFi. It's currently trading just a smidge under $13. And on red days is the best possible days to sell cash secured puts. And on green days is the best possible way to sell covered calls. What's currently happening on SoFi at this $12 strike is an amazing opportunity to sell a cash secured put where all of the technical analysis that I'm just about to show you just makes sense. And as per usual, we're looking for a 4 weeks out. We're looking for roughly a 20 delta, which gives you an 80% chance of the contract not being assigned, or 80% in your favor. You're looking for a 2% in premium. And the play that I'm about to show you at an $11 strike for SoFi makes sense and checks all the boxes, allowing you to manage a small account selling cash secured puts on SoFi. I'm going to share my screen in just a moment, but before I do, I just wanted to explain to you what currently is happening in the market and why this is a perfect opportunity for you to start selling cash secured puts and covered calls. You see, you don't want a straight line. Sometimes you want dips in a bull market, and sometimes you want runs in a bear market. You, as an option seller, live and die by the volatility. And at the end of the day, even if you get caught in a trade that is underwater, you have super weapons, which is rolling and wheeling. If you missed a video about rolling, please click on the link up above. This came out yesterday, so you better understand what rolling is. By utilizing a rolling strategy, you as an option seller are looking for dips and you are looking for rises in share prices due to anomalies. So we get these anomalies all the time, and this is perfect opportunities for you to enter and exit plays. And today you're having an opportunity to enter a play. Donald Trump is talking tariffs. Tariffs talks was going all good. And all of a sudden, the courts rule that Donald Trump cannot institute his tariff. And then another court appealed that and says you can institute tariffs while this is going to higher court. Also, literally a few days ago, a reporter asked Donald Trump, hey, do you know about taco? And Trump is like, well, what is taco? Taco is Trump always chickens out, TACO, because he talks the talk, but then he becomes more lenient. And then earlier today, Trump puts out a statement that China is not playing fair and they're going to go to bat against China. Irrelevant what you feel one way or the other, who you support, this person or that person, this is perfect opportunities for you as option seller to grab the market by the nuts and take advantage of it and squeeze premium your way. And this is exactly what I'm going to be showing you today in this play. Take a look at the screen. 2 weeks ago, I made this video right here where it says sell cash secured puts on SoFi stock. And in this video, I said, this is the setup, including technical analysis, where you're selling a $12 strike and these contracts were expiring on June 13th. If you click on the actual video, this is the play right here that I was doing. And the play is sell for June 13th, a put, and the delta right here was roughly 19. I did all the technical analysis and everything made sense. You're selling a $12 strike at a 24 cents of premium collected, which comes out to roughly that 2%. I wanted to take an opportunity to show you that specific play right here. You see June 13th. At the time, SoFi was trading at $13.60, but because we did technical analysis, which I'm about to show you on this specific play, we took a beautiful trade. And even though SoFi is lower today, roughly 90 cents, you're still looking good. This now is at a 0.23 delta, and you still have roughly a 78% chance in your favor that this contract is going to expire worthless. However, I'm not talking about this contract. I'm just doing a mini management for everybody that's worried because the price of SoFi is going down. I would not touch this. I wouldn't even look at this until not this coming Monday, but the first Monday of the last week of expiration. So I believe that will be a June 9th, if I'm not mistaken. I would not be looking at this. Well, today I want to bring you a better play, much better than this. Why? Because we got that drop, that massive drop that we were looking for based on an anomaly or a roller coaster of the current market due to the tariff talks. And today's play is going to be an $11.50 play, but it lines up so beautifully when it comes to the technical analysis. Before we go any further, I just want to say one thing. I launched a one-on-one coaching for this coming Sunday. I limited it to 5 spaces. And believe you me, you guys are the best possible community because I literally sold out of 5 spaces and people are already signing up for the next weekend, the next Sunday. I want to say thank you very, very much for everybody that signed up for the one-on-one coaching. I will see you this Sunday. If you guys didn't yet and you want to become channel members, I will have a Discord for the YouTube channel members soon. And I will also be doing group Q&A Zoom style where we could share screens for my YouTube channel members. I'm going to leave a link to become a YouTube channel member down below in the comments in the pinned section. So for anybody that's unaware how to sell a cash secured put, I'm going to go back to the original screen. And this is for somebody that doesn't know what they're doing. However, the first thing you're going to do is press trade SoFi options. Over here, instead of buy, you're going to press sell. Instead of call, you're going to do put. And then you're going to go 4 weeks out. 1 week, 2 weeks, 3 weeks, 4 weeks would be June 27. The very first thing that you're going to look at is something that says roughly 80% in your favor. Since I know we're going to be looking at the $11.50, which is perfect for the technicals, which I'll show you in just a moment. Let's click on this. And you're going to look for something that's going to say roughly 20 delta. Okay, so this all checks the boxes. 4 weeks out, 20 delta, 80% in your favor. Now we're going to do the calculation because you want to make sure that you're collecting roughly 2% on your money for a 4-week play. To calculate how much premium you're getting, it's very simple. You take 100, you divide it by the strike price, which is $11.50. That's the price that you're saying you're willing to pay for the shares. And then you times it by the premium that you're collecting right here. Let's do the math. 100 divided by 11.5 equals times 0.24, which is the premium, and you get your 2%. Also, if you want to move forward and you click on this and you're going to press continue, there's going to be a range here, 23 cents and 24 cents. Always try to get the higher number. Let's now go to technical analysis, and I'm going to explain to you what I do for technical analysis and why this technically is a very good play at $11.50 strike. For my technicals, I have a basic screen right here. Then I have the RSI, and then I have the Statistical Isolator, which I still cannot pronounce, and I know you guys are going to kill me. And for anybody that wants more technical analysis, I made a full video on technical analysis. Please click on the link up above and then come back to this video. First thing I'm going to look at is this right here. First, I have something called the Bollinger Bands, which is this blue line right here and this blue line up here. Preferably, when selling cash secured puts, you want to get as close to the bottom of the Bollinger Bands as possible. Well, the bottom of the Bollinger Bands is $11.25. Hence why I'm saying $11.50 is damn near perfect of a cash secured put if I ever saw one. The next thing that you're going to do is you're going to check where the price of SoFi is, and you're going to see, besides for the Bollinger Bands, you're going to be looking at volume shelves right here, and then you're going to look at moving averages. You're going to have a yellow line, a green line, a white line, and a red line, and an orange line. Orange line is not a moving average. It's just the middle between the two Bollinger Band points, the top and the bottom. And then the yellow line is 20 days, which is the immediate short term. The green line is 50 days, which is the short term. The white line is the midterm, which is 100 days. And the red line is 200 days, which is the long term. Every single moving average acts as a support, okay? Either a ceiling or a floor. In this case, the 200-day and the 50-day acts as a floor. Doesn't mean you can't break it, just the more floors you have, the harder it is to break, and the more ceilings you have, the harder it is to break through. So you have the 200-day moving average at $12.35. You have the 50-day moving average at $12.36. And you have the middle of the Bollinger Bands at $12.93. And all of these things are acting as support for the current price of SoFi at $12.96. Also, you have a lot of volume right here, right around just below the current price of SoFi. Not saying you can't break this. I'm saying that this looks like a really good setup for selling cash secured put. However, in the short term, it did break through the 20-day and it did break through the 100-day. Let's now go look at the RSI. For the RSI, this is not overbought. This is not oversold. I like this. It can go either way, and you really don't care as long as it doesn't go below the 1150. And for the static isolator, this is all the way at the bottom, which is good for me when I am selling cash secured puts, which means that this should have a small recovery. As you can see right here, anytime you are here below the 20, it bounces up, it means it's oversold. And anytime you are here above the 80, it means that it is overbought and it can drop. Sometimes you have little things like this where you see it touched right here, then it came back up and now it's going back down, which is fine. If you stay in this range, this is also good for you selling cash secured put on SoFi. So the technical analysis for SoFi at the $11.50 strike looks absolutely like a beautiful setup at $11.50. It is in the bottom of the Bollinger Bands. It is higher than the midpoint of the Bollinger Bands. You have the 200-day moving average as support. You have the 50-day moving average as support. You have some volume shelves as support. The RSI is literally in the middle. And the SATA isolator is at the low points. All of this combined seems like a good strike price of $11.50. I'm going to show you one more thing that I do before I actually go through with this contract, and then I'm going to show you how to actually go through with the contract. There's one thing that I didn't do in terms of my technical analysis, and the first thing I always do is actually do a year to date, and I look at the low points, and there's a low point right here at roughly $10, and then the next low point was roughly around this $11 mark, and then you have roughly this $11.26 mark. So I am confident with an $11.50 strike. By the way, if you guys don't know, I have a $650,000 collateralized position on SoFi with a $14 strike expiring on June 13th. If you missed that video, click on the link up above. I've been rolling this for the last 4 months, putting up $655,000 as collateral and collecting over $62,000 of premium. Let me repeat that again. I made $62,000 of premium. How do I do this? Well, my name is Adam. I am not a financial advisor. This is not financial advice. I am just a 42-year-old who retired last year in 2024 at the age of 41 years old. Earlier today, I was playing pickleball, trying to get into shape and living the retired life. So don't take my word for anything. Do your own due diligence and definitely do your own research. I am just sharing my own personal journey with you. So I use the premiums to supercharge my life and buy myself nice things, stacked on top of dividend income, which actually pays for my bills. And I also have a couple of leaps that accumulates or appreciates my net worth and my assets. So everything absolutely makes sense for this play. Let's now see how to do the play. It's currently open. I'm going to do one contract. Why? One contract is 100 shares. I am going to ask for 24 cents. At this particular point in time, they wouldn't give you 24 cents. They would give you 23 cents. But if it's me, I would still ask for 24 cents. It probably is going to fill throughout the day. If you don't want to do it, you could do 23 cents, which is pretty much your 2% regardless. I have roughly $165,000 that I could do on this play. I'm not going to do that. And your max loss is $1,126. You are collecting $24 in premium. If you add $24 plus $1,126, you have a number of $1,150, which is this play. $1,150 strike times 100 shares right here is $1,150. And this is how you manage small account. Now, if I wanted to do this play, all I got to do is press review, and then I would press submit. I just want to show you guys something. Right now, the price just jumped as I was talking. This happened because people are trying to make a market. Don't worry about it. As you can see, it literally dropped to like 15 cents, and now the bid is back to 20 cents. I want to tell you guys something. As an options seller, whether it's covered calls or cash secured put, you have to look at a moment's notice. This deal could only be a deal for 5 minutes, and then the rest of the day, it doesn't work out. This could not be a deal for an entire week, and then all of a sudden, you're going to have a 5-minute window, like I just showed you right now, where this actually makes sense. At the end of the day, you as an option seller, even if you're a casual and not a professional like myself, who doesn't do this like for a living now, need to look through what's available for you. And this is why I tell everybody, you should concentrate on just a few stocks. For me, it's SoFi, Robinhood, Nvidia, Tesla, and some type of Bitcoin play. Sure, I have others, but those are my main bread and butter plays. Because I only have 4 or 5 stocks that I do this on consistently every single day, in and out, I'm looking at it, I know what to look for, and on a moment's notice, like what's happening today with the tariff talks, I have an opportunity to enter a strategy or enter a play. And vice versa, if you are in a play, this gives you an opportunity to get out of a play. For example, if you had a covered call and the price of SoFi drops right now, instantaneously, you should go look to possibly close out your position early. And if you don't know about closing out a position early, click on the link up above where I talk about the possibility of closing something out early. I hope this made sense to everybody. If you have any questions, please feel free to ask down below. And for all of the people that are going to say, Adam, but you put up $655,000. That's how you made $60,000. Sure. But if you do the percentage, the percent adds up to roughly 2 to 3% every single play that I'm doing. So at the end of the day, if you only have $1,150 to play with, then you're only making $24. But if you have $11,000 to play with, you're going to be making $240. And if you have $111,000 to play with, you're going to be making $2,400. And if you have $1 million, 100,000 to play with, then you're going to be making $24,000 or whatever it comes out to be. At the end of the day, 2% is 2%. If 2% doesn't seem like a lot to you, it's because you need to accumulate wealth and make money. So 2% or $24 for somebody that doesn't have a large account is a huge number. What if you're just starting out? What if you are young? So on and so forth. But if you have a lot of money, 2% of a lot of money is still a lot of money. But at the end of the day, the underlining is still 2%. So for people that are discouraged or people that are angry or for people that don't want to put their best foot forward, stop being negative, okay? Be positive. At the end of the day, change your life, put your best foot forward, and take the leap. Not financial advice. I'm just a guy who's retired at 42 years old, playing pickleball, trying to get back into shape in the middle of the day because I am retired at 42 years old, showing you transparently my plays, no fluff, no BS. And if you guys want some more content, please click on this link right here. This is me managing underwater plays. And please click on this link over here. This is my options folder. Thank you very, very much and have a blessed day.